Why does the stock market go crazy every time an IPO happens? When a privately owned company wants to go public on an exchange such as the Nasdaq or the New York Stock Exchange, it has to IPO. IPO stands for Initial Public Offering, and this is the process for privately owned companies to go public and trade on the stock market. By trading on the stock market, companies can raise massive amounts of capital to invest in new products and develop. This allows the company to grow very quickly and develop from a mere startup to an established firm. When a company is private, when it hasn't IPO'd yet, it's owned by venture capital firms, founders, or very early stage investors, so it's very private and only a select few can invest in the company. As we know, when it's on the stock market, the public can buy it. Anyone can buy a part of the company, and that's where it gets a little bit chaotic. The stock market reacts very strongly because investors are eager to get in early. This can mean that the price skyrockets on day one. We've seen this recently with companies such as Reddit, Klarna, or Figma. Their stock prices jumped massively in just a couple of days. Reddit's stock price has grown 570% from its IPO price of $34, so it's now trading at around $200 per share. However, this growth is often unsustainable. For example, Klarna is trading at 22% below its IPO price of $40 a share. And Figma closed its first day of trading at $115 a share, but is now sitting at $34. Private companies such as SpaceX, OpenAI and Discord are set to have some of the biggest IPOs in history, most notably SpaceX, Elon Musk's company, which is set to IPO in early 2026 at a valuation of anywhere from $800 billion to $1.5 trillion. IPOs are major milestones for companies, but investors should treat them with caution and not get drawn into FOMO. So if this video taught you something, then drop a follow.